All right. Good afternoon. Good afternoon. Come right in. Good afternoon. Come right in. Welcome back to Millionaire Money Minds. Today, we're going to be talking about a bunch of things. This is just going to be one of several videos that I put out today, but I thought that we would spend a little bit of time getting back to the money, right? And so today, this popped up on my timeline.
Where's she at?
Before we get to the money, today, I want to show y'all why you should probably be investing in the topic that we're going to be covering, and the stock that we're going to be covering, so that you can avoid situations like this. This is in Detroit. This is in Michigan. Well, not Detroit technically, but it's a mall, very popular mall here at 12 Oaks, Michigan. It says a woman caught shoplifting. There she is right there on the floor looking goofy as hell. Embarrassing as fuck. Embarrassing the hell out of the community. Embarrassing the hell out of herself. She's combative. She's fighting. She's resisting arrest, so you add even more charges to yourself.
Oh my God.
What's going on here? What's going on? Come on. Where's my video? I don't know what's going. There we go. Nope. All right. So anyway, I'm just gonna let it do what it does. I'm gonna mute it. So this woman was caught shoplifting in 12 Oaks Mall, right? She tries to run away from the police twice, it says. Twice. And it says that she stole from a nearby Bath and Body Works and ran through JCPenney once the salesperson alerted the police. And now you have a situation where she's been caught and she's still fighting. What you fighting it for? It's over now. It's done. You came up in the mall, thought you could get one over. There she go right there. Walking away in handcuffs. Now look, you got Becky defending her. She might have been stealing, but you don't need to treat her like that. They need to be treating her like that. What they treating her like? They hauling her ass up out of there. What you mean? So tired of it. Now she's acting like there's some type of police injustice going on here. It's not. There's no police injustice going on here. And listen, I've been in plenty of situations where the police did some dirty shit, right? I've been pulled over while driving black, so I understand what that means, right? But this is not one of those cases, and this is not one of those situations. Let's not get shit confused. People. This motherfucker came to the mall with an agenda to steal her worth in clothes, and the shit failed. She ends up getting caught, and now you got Becky's trying to defend her, talking about she might have been stealing, but you don't need to treat her like that. Do y'all know what they used to do? What they still do in some foreign countries when you're caught stealing? Cut that right on off. Get that right on up out of here. Right? So anyway, look. I just wanted to share that with y'all because I wanted to let y'all know that y'all don't have to do that, man. Listen. There's so many ways to get money out here, right? I know it seems difficult. I know the times that we're in seems difficult. I know it seems stressful because it can be. Life can be. I know it seems like you're overcome and overworked. You're overcome with bills. You're overcome with life issues. You know, every other day it seems like products, brands, services are going up and up and up, right? And we are finding ourselves in a situation where the middle class is being phased out, and you either going to be lower class or you're going to be well off, right? That's where everything is coming to a head, it seems. It's harder and harder to sustain life and just live normally, right? So we gotta take some accountability on ourselves, right? We gotta minimalize our lifestyles. We have to cut back on our expenses. We have to start monitoring everything that we're doing with our money, right? We just have to take the necessary precautions. You already know the state of the world, right? You already know the state of the economy. So now you have to be the one to react and take it upon yourself to put yourself and your family in a better situation. And you can only do that by cutting back on your expenses, monitoring where your money is going, and just being more aware, right? And more diligent in investing in the market, saving your money, and making your money work for you. That's what the rich do, right? So I want to talk about realty income for this video, and it's going to be really quick. It's not going to be a long, drawn out video. Realty income is known as one of the REIT kings. Okay, REIT, of course, stands for real estate trust, and realty income has been known as a dividend machine. You can see it right here. I got it pulled up on the Motley Fool. It says realty income is a buy for 2023 and beyond. Right. So I'm going to go through this article and read just a little bit from it because I thought it was very, very interesting. I've been paying attention to the market, and I was just playing the game last night with my cousin, and we talk a lot about a variety of different things, but we were talking about the market and the state of the market and how it's in shambles right now, right? And every time you open up your phone, you just see a sea of red, and so I was just mentioning how it's a great time. We were just talking about how it's a great time to buy. And that's absolutely the case for realty income. But let's get into it. Let's read some of the article. It says the stalwart REIT provides a main course of income with a nice side of growth. Now, before I read this, let me say this. A lot of people talk about getting into real estate, right? Everybody wants to get into real estate, and the primary reason that anyone would want to get into real estate is because it's passive income. Right? It's a passive income avenue and a passive income lane that you can add to your life, and that it's supposed to be designed to provide you income that you don't have to really necessarily work for, right? But I think the thing that gets overlooked is that there are multiple ways to get into real estate. You can be a real estate investor and still bring in something comparable, right, to what you might do if you were actually out there buying or renting out homes. Okay. I know someone personally who has homes and he rents them out. Right. And for him, it's allowed him a life of leisure. Right. And I think who wouldn't want that? Right. Who wouldn't want a life of leisure? But there are more ways to get to the goal than one. And I think that investing in real estate, in REITs, right, investing into real estate stocks and real estate companies in the market, I believe that you can achieve the same goal, right? The same goal without the hassle of having to worry about it, right? So follow me for 1 second. What if you could invest enough in the market into real estate stocks, right, to where you're being paid out on a monthly basis from properties through the acquisition of real estate stocks and REITs, right? What if you could build up a portfolio that is paying you on a monthly basis $4, $5, $6, $8, $9, $1,000 a month, right? That's extra income. Again, passive income. You don't have to, except you're doing it without the headache of having to manage the actual property. Right? You don't have to deal with tenants. You don't have to worry about people coming in and destroying your shit. You don't have to worry about the upkeep of it, right? To me, this is a no-brainer, right? You do away with all the hassles that you would have to worry about with common real estate investing, or buying a property and trying to sell it, or buying a property and try to rent it out. So for me, this is an avenue in a different way for people to get into real estate investing without having to worry about all of the other things that come along with owning a property and trying to rent it out. So let's get into the article, right? It says a down market, which is what we're in right now, Seems like a good time to stock the pantry with equities that are selling at a nice price while carrying the promise of solid returns for years to come. Do I need glasses? Jesus Christ. That's true for those interested in either gold growth stocks or more solid, I think that's supposed to be solid income focused names, right? As a retiree, I fall in the latter category and find Realty Income a fine option to consider for a buy for 2023 and beyond for several reasons. First, the Real Estate Investment Trust, REIT, has a long history of reliably paying dividends. Second, it does that while increasing the payout not sharply but consistently. Third, it has the cash flow and debt management chops to maintain an investment-grade balance sheet through economic ebbs and flows. And finally, it has a portfolio that is growing and diversifying, and most importantly, largely pays the rent on time. Now, let me sum up what this said just within that short couple paragraphs, right? What he's saying is basically Realty Income, is a stock that is trustworthy. It's dependable, right? It's steady income. It's been growing that income, those dividend payouts over the years, has not stopped and has not declined. In addition to that, it's saying it has the ability to withstand whatever the economy brings, right? Whether it brings us bad news, good news, or the economy or the market is indifferent, it has the ability to withstand each of those situations. Whether you're up, down, doesn't matter, right? That's what he's saying. And he's also saying that not only has this company been able to maintain and stabilize, right, its income, but it's still growing. And that's absolutely what you want. They're still making acquisitions. They're still buying properties out there. They're still expanding their business. So those are all the things that you would want to consider when you are looking into purchasing a stock, especially a REIT, right? He says, and as an added bonus, Realty Income pays dividends monthly. And for those of you that know, you know. For those of you that don't, monthly paying dividends, people tend to like them more because obviously you get that compound action quicker and you get it more consistently on a consistent basis, right? And it's more dependable. For people that are looking to retire later on and you're having monthly dividend stocks versus quarterly or semi-annually, you know that every month you're going to get that check, right? So it's just like someone paying you. It's just like someone paying you rent, right? Realty Income is paying you rent to simply own their stock. They're paying you rent, right? And so what if you could build up enough shares of this to where you're getting $500 to $1,000, $1,500 a month? That would be remarkable, right? Who wouldn't want that? That would be great. Let's read a little bit more. It says a big REIT with retail as its bread and butter. Realty Income lays claim to being the fourth largest global REIT. Fourth largest global REIT. With a portfolio that has grown to about 12,040 clients, Jesus Christ, that was wrong. With about 1,240 clients and 84 industries occupying just more than 12,200 net lease properties in all 50 states. In all 50 states. You want to talk about diversifying your property? All 50 states. Puerto Rico, the UK, Spain, and most recently, Italy. As a net lease REIT, Realty Income collects rents while its tenants pay most, this is important, while its tenants pay most of the operating costs of the properties they occupy. That means, again, this is so important. Their tenants are paying the majority of the operating costs, which means that's not coming off of their bottom line. Their tenants are paying that, right? So while it's classified as a retail REIT, and indeed 76% of its business is with retail businesses, that's key. says 76% of its businesses is with retail businesses. And if you know anything about retail, I've worked in retail for over 10 years before, so I know a little bit about retail. Retail businesses are up and down, right? They go with the economy. They go as the economy goes. So they can be shifty. So it's important. It says Realty income is diversifying. The company recently bought a casino. Ooh, I like that. And is investing in vertical farming as well as some small healthcare properties. So listen, they are growing, they're diversifying, they're understanding the need to have a broader range of properties in different fields and various fields. And as you can see right now, listen, here, I'm going to switch over. I'm going to read this last paragraph first. But retail remains its bread and butter, with grocery, convenience, and dollar stores accounting for about 26% of its annual rent and roughly 40%. So that's your Dollar Generals, right? Your Dollar Trees. Who doesn't love Dollar Tree? I love Dollar Tree. And 40% of its income from investment-grade operations led by names such as Dollar General, Walgreens, Walmart, love me some Walmart, and Home Depot. Gotta love you some Home Depot stock. There's also geographic diversification, with Texas leading the list at about 10% of its rental income, followed by the UK at 9.5%. It says that it's still a passive income powerhouse. To say Realty income is a top shelf producer of passive income is not a reach. The company boasts a compound annual total return of 14.6% and an average dividend increase of 4.4% since its 1994 listing on the New York Stock Exchange. That's along with paying dividends for 634 straight months and raising its dividend 120 times over that stretch. That is incredible. That is incredible, right? That is incredible. Now, I'm going to read this last piece. This chart nicely illustrates how much dividends enhance total returns. Realty income stock price hasn't moved all that much in the past 10 years. So this is not a growth stock. This is not like your, let me take that back, because I won't say it's not a growth stock because it has grown. What I will say is that it's not your typical growth stock. You cannot expect the same returns that you would expect from a growth stock such as Tesla or Amazon or something like that, right? It says, but consistently paying rising dividends has had a very beneficial effect on what investors have actually gotten over that time. And here's the chart here. You can see the dividend change. This is a 10-year price total return, right? So you have Realty Income Corp price change. Not that much, right? The price hasn't grown. In other words, the stock appreciation hasn't appreciated that much. But when you look at the total return, ooh, and when you look at the dividend change, it's been on a steady incline. That's what you want to see. And if we switch over here to Realty Income, got to pull it up on stock analysis. You'll see that price. At a price of $56, you're damn near getting 2 shares with $100, people. You're damn near getting 2 shares for $100 right now. I remember when this stock was upwards into the $70 and $80 range. Okay, so it's down right now, and you can see that on the chart. If we click on the year to date, it's down 10-11%, right? It's down 10-11%. Last month, it's down 10%. Look at the year chart. It's down 20%. So you can see that it's down, right? 5-year chart, it's barely down 0.43%. That's not too bad, right? But considering the state of the economy, these are the things that you have to take into account when you're getting into REITs, and understand that there is, as always, a little bit of risk involved, right, when you're investing into REITs, because REITs go as the economy goes, okay? And so a lot of what's happening in the economy is going to heavily impact a lot of your REIT stocks and REIT positions that you have, especially when you're talking about the rise of insurance rates and things of that nature. And so and banks, bank loans, all of those things matter. But if you look at the max chart, this thing is up massive. Over 633% all time since 1994. And so this is what I speak about when I talk about investing into something like this versus something like AGNC, right? You can see the clear difference here. AG&C has lost 50% of its value since its conception, and it's been around for damn near the same amount of time as Realty Income has. But it has lost 50%. So if you would have invested way back when, you would have lost 50% of whatever you invested. This here, you would have gained 630. Listen, it's a no-brainer. It's a no-brainer, in other words. No-brainer here. I don't have to sell you on this. I don't have nothing to gain from selling you on buying Realty Income. I'm just trying to provide a little bit of insight, right? So this stock is down. And right now in the market, the downtime is the time where you want to be buying. This is the time you absolutely want to be focusing and honing in on those stocks that are down. Pay attention to those things that you've had in your list, in your watch list. Go over them, check them out, and see what's going on, and see if you can get in on some of these sweet deals that are out here right now, right? Let's look at the balance sheet. Let's look at the cash flow. Operating cash flow is in the positive. Acquisitions, as I said before, and as I read in the article, you can see that they're growing their business, right? They're growing the business right there. They're adding things and making moves, which is what you want to see from your company that you're investing in. So listen, let's go to free cash flow. Free cash flow, ooh, that free cash flow ain't looking so good. But again, we know why. We know why that is, right? They don't have as much free cash flow. Why? Because they're taking on new acquisitions. And they've been doing that for years, right? So anyway, let's go over to the stock forecast. Let's look at the stock forecast. It's currently a buy. It says stock price forecast. According to 7 stock analysts, the average 12-month stock price forecast for Realty Income stock is $70.43, which predicts an increase of 24%. The lowest target is $66 and the highest is $74. On average, they are rating this a buy. So that's just, listen, let me tell you something about this, this average of what they're expecting. That's what they're saying the stock could reach, right? In order to find out inherently what the value of this company really is, you would have to go a lot deeper and analyze these financials and their statements, right? And you would have to come up with a formula, right? There are plenty of people. I've seen tons of videos where people have formulas where they break down what a company is worth and what a stock is worth and how you find that intrinsic value. But there's several different formulas. You're going to be responsible for coming up with the one that you think works for you. Okay. But they're saying the average price right now for this stock is $70, which it's well below that. And at these prices, at a price of $56.85, damn near, like I said, you can get damn near two of these for $100. I think that right now is a great buying time for Realty Income. So if you're out there, you're looking for some passive income, go ahead, check this one out. Don't take my word for it. Do your own research. Make sure you invest diligently. More importantly, invest responsibly. I'll see you all in the next one. Later.
Yo, I see the lights and the cameras, you niggas acting. But fuck the lights and the cameras, we bout the action. From the place with the Joe like 5 Jacksons. When niggas doing bullshit, only the field Jackson.